session, Redefining Global Living, we have Mr. Kevin Goh, Chief Executive Officer, Lodging CapitaLand Investment Limited, Chief Executive Officer, the Ascott Limited. Mr. Goh played an instrumental role in creating the largest hospitality trust in Asia Pacific, now known as CapitaLand Ascott Trust. In 2022, Mr. Goh led the acquisition of Oakwood Worldwide, which fast-tracked Ascott's growth. The Ascott growth strategy to deliver strong fee-related earnings to CapitaLand Investment. He also transformed Ascott into one of the world's leading international lodging companies with a portfolio that spans over 230 cities in over 40 countries. In conversation with Mr. Goh, we have Ms. Megha Tuli, partner and co-founder at Hotelivate. Megha is responsible for the overall planning and execution of business, as well as ensuring the ongoing growth strategy of the firm. Please give them a round of applause.
Thank you. Thank you, Kevin, for being with us today, especially on our milestone edition.
Thank you. Thank you for having me.
So I think for the benefit of the audience, maybe we can start with just an overview of where Ascott is today and a little bit about your journey with the brand.
Sure, thank you. Good morning, everyone. Just a very quick introduction as to Ascott and what we do. We really started off life as the service apartment operator. We have the first one in Singapore, 1984. And we've been growing our brands, growing our portfolio, growing our network over the past 40 years. Today, we have a network of about close to 1,000 properties in 240 cities, 30 countries. So we are specialists in the extended stay space. That's our DNA. But we've been expanding very aggressively in the flex hybrid model, whereby we can also deploy 16 of our brands in different typologies, whether it's a service apartment or in a hotel. So I'll elaborate as we go along in the conversation, but just a very quick note on our ownership. We are 100% owned by our parent company called CapitaLand, and CapitaLand is indirectly owned by Temasek, which is really the Singapore investment company. So indirectly, we are 52% owned by Temasek. So we do want to expand in India, and we see lots of opportunities here.
Right. So, Kevin, I know you've had like a front row seat to the transformation of global hospitality, and you've been tracking India very closely. So let's start with the big picture. India is obviously rapidly climbing the global economic ladder, and you're seeing some of those ripple effects in hospitality and tourism. From your global vantage point, what do you find most exciting about India's role in the world of hospitality today?
Right. India is a very high conviction market for us. So we are very determined to invest in India, spend time here, grow our network and portfolio here. If we look at India, from a hotel room density perspective, there are probably about 0.5 rooms per 1,000 people in India. If you look at US, you look at Singapore, that number will be closer to 15, 16. So in order for India to reach that density of, say, Singapore and US, there's about 40 to 50 times growth headroom in India. And today, India is a very underserved market in terms of products. We bring along a different product offering. We have service apartments where people can stay long stays, short stays. We have a product that is very different from the regular hotel product. We provide hotel service, but we have something that is different from what the Indian consumer would want. So the other angle to look at this is really the demand and supply equation, right? So you look at it from a demand perspective, India is growing, disposable income is growing. People want new products, people want new experiences. You look at the supply side, I just mentioned about the density in terms of hotel rooms. There's still a lot to grow, and we have good products that we want to offer. So from an overall perspective, I feel India is in a position whereby it is poised for growth. We've had this journey with China many years ago. In 2008, we started with only 10 properties in China. We saw GDP growth, we saw FDI coming in, we saw disposable income increasing, and today we have 240. So in the span of 15 odd years, we grew from 10 properties to 240 properties in China. So that's where we see India really at the cusp of taking off, and that rapid growth is something that we look forward to. And I think today we just released something to say that we're going to double our footprint in India from 6,000 keys today in the extended stay space to 12,000 keys. Right? It may not sound like much, but in the extended stay space, I think we're probably the number one player for this product here.
But obviously, Ascott goes way beyond extended stay today. And I want to, take a cue from our session title, which is Redefining Global Living. What is your view on global living or co-living, and how has this sort of concept evolved over the years, and how does it apply to the extended stay segment and hospitality generally?
Yeah, so the landscape is evolving. People are not just looking for a room to stay. Like I say, as disposable income goes up, the demand for experiences and product is very high. And you can see that with affluence, people are willing to pay for quality. I was just with some Indian business friends this morning. They said that it may not look like it, but there is a lot of capacity to consume in India. And you have a quality product, you have a good product, people will come to you. Right? So we believe that that will drive a lot of our expansion. We also think that with new brands that we are introducing to India, traditionally Oakwood is one of the brands that we entrench in India, all right, and it's in many different cities across India. But we have 14 brands, right? We have Ascott, we have Somerset, we have Citadines, we've got Life, Crest Collection, and each of these brands gives a different proposition, a different experience, a different lifestyle to guests that comes to stay with us. So there is just so much to do in India, and we can't wait really to get going.
But I want to double tap on this idea of global living, because I think it's so core to Ascott's strategy, and you're really operating at the heart of it. I want to understand, how is Ascott bringing this concept to life on the ground? Do you have any specific examples that you can share across the portfolio, across markets where this is applicable?
So maybe I'll take a leaf from our DNA. Extended stay is a sweet spot between the hotel product and the residential product, right? Because if you come to a city and you're going to stay 3 months, you don't want to be cooped up in a small hotel room. But you can't actually rent a condominium unit, because that would be a 1 year or 2 year lease. So that's our sweet spot. And the people that stay with us, who are these people that stay 3 months, 6 months with us? These are traditionally the corporates. And these corporates, they do business globally. Right? These are your Fortune 500, Fortune 1000s, and we signed up many of these as our customers, and they are our direct distribution channels. They recognize our brand. They recognize what the brand promises. They feel that it's in line with their lifestyle. So whether they are working in London, in Singapore, in Sydney, in Mumbai, or in Delhi, they see the brand and they know what the brand stands for. And there's some global expectations around the standards that the product provide, the services that we render. Right? So that in itself is a very powerful, I would say, ecosystem between us and our customers, our global customers who travel globally staying with us. Now, the second part of it is the domestic demand. If you look at, okay, I'll take China and Australia as an example. In the early days in China, I would say 60-70% of the customers that stay with us are foreigners. Today, I would say 80 to 90% are domestic people that stay with us. And that's because in the early days, they have expats coming in. They need to stay in a service apartment for 6 months a year. Now, they have the local talent, and a lot of these positions are taken by locals. So domestic travel, domestic economy, domestic demand will follow, and that's a big driver of a lot of our service apartment business. The same thing in Australia. Australia, we have a brand called Quest. We have 200 properties across New Zealand and Australia. A large part of it are driven by what we call national accounts. And these are accounts at the local level. It could be National Bank of Australia, it could be Commonwealth Bank, it could be the mining and resources, defense companies that operate in and around Australia. So the definition of global living then gets filtered down from what a global community recognizes to a domestic clientele base, right? And that's how we continue to define that space that belongs to us, where we feel we have the dominant position.
So, you already mentioned Ascott's sort of multi-typology strategy, and I think you have everything, like you mentioned, from serviced homes to apartments to hotels and resorts, etc. And what I understand is at a portfolio level, 50% of the revenue is actually coming from shorter stay, transient or leisure segments. How do you see that flexibility, playing out in a market like India?
So we started off with people who stayed with us really long, right? And the longest customer, I think, is 2 decades. Someone stayed with us for 20 years in Singapore. It was an expatriate. But as we go along, we find that there's a lot of demand for apartment-type product for friends and family travel. So if you go out with your family or a bunch of friends, you want to stay in a 2-bedroom apartment, a 3-bedroom apartment, or 2 units with a nice connecting feature, that demand has picked up a lot for us. And over and above that, once you've stayed in the service apartment, you don't really want to go back to a hotel room. I've got many friends who used to stay in hotels. They stayed with us in the service apartment. They find that they got more space. They get a cooker hob. They get a washing machine. They can do their own thing. You don't have to meet at the lobby bar. You want some privacy, you can call your friends up to the living room, have a chat, coffee, drinks. That kind of lifestyle is very different from a traditional hotel offering. So from that perspective, we are actually picking up a lot more shorter stay customers. And that works very well for us because we can traverse one night, we can traverse 20 years. Right? So depending on where we are in the economic cycle, say for instance, if times are good, working on the shorter stay spectrum allows us to yield better. So from an ownership perspective, when demand is hot, we lean into the shorter stay segment. When times are more challenging, we lean out and we get into the longer stay segment. So from a revenue profile perspective, we can remain fairly resilient and fairly stable. And the banks like us for it, because when the banks underwrite some of our projects, they look at the hotel profile, right? Hotel is essentially a very cyclical business. It can go up, come down, go up, come down. But when they compare it to a service apartment earnings profile, we are fairly stable. In fact, if anything, when times are good, we have a little bit more upside. And when times are not so good, our downside is protected. So for instance, during COVID, when times are really bad, we still average an average occupancy of 40 to 50%. Some hotels really go down to a very, very low occupancy. But at 40 to 50% occupancy, we're able to break even. We're able to have enough cash flow to keep the property going, and we live to fight another day, when things open up, everything boom again. So that's kind of like how we see short stay demand versus long stay demand, and how short and long stay can interplay to give that resiliency to the product.
Right. Okay, so let's talk about Life, because that's the brand that you're sort of launching today. And for those of you who haven't seen their wonderful booth outside, you must go and visit and understand a little bit more about the brand. You've mentioned that it's a community-driven brand, but there are many other brands that claim to do the same thing. So can you explain to us what really is different about this brand, and how are you planning on rolling this out in the country and scaling it in this part of the world?
That's an interesting one. So Live was actually started by a group of young colleagues in our company. We set them aside, give them a budget, put it as a different department. Don't come to us for approval. Think of what you want to do with it and create that product. So the first Live started in Singapore in 2019. The few key features of Live, I'll talk about it from various perspectives, right? From the customer's perspective, from the brand perspective, and from the owner's perspective. Now, from a customer's perspective, it is a brand that attracts the younger generation. The younger generation likes experiences. So our tagline is experience-led social living. We have social kitchens, we have co-working spaces, we have gyms, we have laundromats that people can hang around and have conversations. They like a community, they like a tribe, they like to be able to hang out with people who are like-minded, like them. So that in itself is very attractive to this customer group. They like the technology. They can book, they can get their mobile keys, they can ask for things online. They don't have to talk to anybody if they don't want to. So that, from a traction perspective, has actually helped us grow very quickly. We started the first one in 2019. Today we have 35. We have 15 that are operating. We just opened one, actually today, in Bondi Junction in Sydney. We're going to open one in Paris. We've got 3 in Singapore. Bangkok. So we're going to have lives all over in the key cities globally. So that's the customer perspective. Now, from an owner's perspective, it is very powerful because life is super, super, super efficient. We'll just give you a quick example. We had a capsule hotel conversion in Tokyo. You know, capsule hotels are typically quite small. We managed to convert it to a live. It's called Live Ginza. So if you happen to drop by Tokyo, do visit us. From a capital efficiency perspective for the owner, the rooms are probably, say, about 14 square meters, 13, 14 square meters, but it's able to produce a ADR of, close to, say, $200. And the common spaces are very efficiently designed. People like that product. It is in a good location. And an investor actually did well. Recently, they sold the property, and they made a very, very good IRR from that product. The same can be said for the one in Singapore. It was about the total GFA of the live property is about 7,500 square meters, but there are close to 400 beds in that property. So you can imagine how we can pack the maximum number of beds with good social areas to drive a return for the owner. So if we can solve the equation of what our guest wants, what the owner demands from a return perspective, and put that together, that's the formula for really scaling the product very quickly. And today we're signing lives as one of our brands that is the most popular. People can see the capital efficiency, can see the demand from our customers, and we put that together. We're going to sign a lot more coming up.
Yeah, looking forward to that. I mean, they're the best dressed people at the booth. You must go and
Please come visit us. I'm sure my colleagues can do a better job in explaining life to you.
Okay, so let's pivot a little bit to growth. Obviously, Ascott has used acquisitions in the past to, as a means of growth, and one of the most popular ones has been Oakwood. That's the brand that's I think most people in India are familiar with. So how is that acquisition played out for you, and what kind of new acquisitions are you looking for? What are the things you're focusing on for future acquisitions?
We are very, very open-minded when it comes to growth, collaborations, M&A. We've done a couple in the past couple of years. We bought Quest, the Quest brand in Australia. It's a fully franchised brand. So I mentioned earlier, across New Zealand, Australia, we've got about 200 of them. We bought a hotel platform called Tauzia in Indonesia. It was about 150, 180 properties, thereabout, management contracts, asset light. We bought Oakwood just about 2 years ago. It's one of the most exciting ones for us. Oakwood is traditionally an American brand, but they are very, very strong in Japan. We like the Japan portfolio. In Tokyo alone, I think there are close to 20 Oakwoods in all the key locations, right? Beside the Imperial Palace, in Azabu, in all the locations, the prime locations that people want to stay in. So we have since grown the portfolio by 30%. I think when we bought, it was about 15,000, 16,000 keys. Today is closer to 20,000 keys. We see a lot of growth momentum behind it. We want to deepen the presence in India with Oakwood, but we also want to bring in brands like Lives, right? So out there, if there are prospects or people who are interested in Live and want to build a Live in India, some of the key cities, that's where we really, really want to work with you on exploring these opportunities. So again, very open-minded. If there are good collaboration opportunities, win-win propositions, we are very open to collaborate. We are very open to do acquisitions. We are very open to do JVs, if that's the right formula.
And what about other means like franchising as a growth model, or looking at conversions? And branded residence is obviously really picking up. I mean, are you open to some of these formats as well?
Absolutely. So there are a couple of things in there that are unpacked. I think conversions is very popular and very high on our agenda today. Out of our signings, we signed about 15,000 keys last year. 1/3 of them are conversions. So conversions are very hot. It gives us quick time to market. Branded resi, we've done a couple last year. We're a little bit more particular about branded resi. and we want to make sure that we can add value to the owner. So we've done some in different parts of Southeast Asia. Southeast Asia is where our stronghold is. 80% of our portfolio is actually in Southeast Asia. So a lot of owners trust us. We've got lots of good network of customers there, and we'll continue to deepen our presence in Southeast Asia. And then you have, what else do you say? Branded resi, conversions.
Franchising.
Franchising, yes. So franchising is also very high on our agenda. A bit of history. We started really as a asset owner many, many, many years ago. And then we found that just managing our own properties is very difficult because you can't build scale, right? And we have nice brands. We used to have other owners coming to us to say, can you manage this for me? We said, no, sorry, thank you very much. We would like to focus on our own real estate. But things have evolved, right? So we have sold off most of our real estate, if not all. We have now 16 brands. We're very focused on management contracts. We built our network globally with management contracts. But really the next thing that we're pushing very hard for is franchising. So Quest is a fully franchised brand, Australia, New Zealand, that's sorted. We've signed a franchise contract, a franchise partnership with Jinjiang in China, and then that one will go on its own. We will be franchising more of our brands as we go along, but that will also come with the maturity of the market. As long as we feel that the partner is ready, the country is ready, we definitely want to push a lot more on the franchise front.
Okay. So we're almost out of time, so maybe we'll end with you've recently expanded the India team quite a bit. So if we fast forward to, let's say, 2030, what's the mandate to the India team? What does success look like for Ascott in India? And what part of sort of global narrative is India going to play for the portfolio?
I mean, the immediate target is to double our footprint by 2028. Yeah. I think if we can triple our footprint by 2030, that would be a nice sign of success in India. I think at the end of the day, it's not really just about the numbers. It's also about the ecosystem. We think win-win. I think the ecosystem of owners, the franchisor, franchisees, and the customers or the management company, these three parties must benefit. Yeah. If the balance is tilted in the favor of anyone, it would become a very, very tenuous relationship. So we want to make sure that we can bring value to all parties in the ecosystem, whether they're owners, whether it's our guests, whether it's us. We need to maintain that balance and always think that we can build a win-win-win, relationship between these three parties. And I think with that, I have no qualms that we will up our key count, we'll grow a bigger business in India. And I think this is going to be a very exciting journey for us in the next couple of years.
Wonderful. Thank you so much for that, Kevin. Our time's up. It was a pleasure to have you here.